Hi guys, this is Cezary Zieniuk from IBCCS TAX, and this is the video about tax planning for UAE tax residents. Many clients from UAE have asked us to record this video in order for the whole world to find out what are the alternatives in terms of choosing a low tax or zero tax jurisdiction in addition to UAE. As you know, in 2023, UAE has introduced corporate tax of 9%. Although it's a very low tax and it's one of the lowest tax in the world actually, still for some clients it might be a painful money to be paid. We have also made other videos related to UAE taxation, and actually there you can find out that 9% of tax doesn't relate to all businesses. So you can still do business through free zone companies with qualifying activities. You can have a UAE holding company that is not taxed. However, there are certain activities within UAE that are now taxable, for example trading or providing services. So especially for IT people, professionals that are providing corporate service, professional services, advices, consulting services, or people who are doing international trading, this is the video for you, because we'll expose some nice alternatives of how you can still pay zero tax using other jurisdictions than UAE. And this is still beneficial for you because as UAE tax residents on the individual level, you pay zero personal income tax on dividends, salaries, and all the personal income. So strictly speaking, you can have a company abroad in the countries that we'll mention now. This company pays you dividend and you pay zero tax on the company level from abroad, and you pay zero tax on dividends. So while living in UAE, you can still maintain zero tax structure both on personal and corporate level. We are discussing taxes, and for many people, tax planning and going to lower jurisdiction for tax purposes is the main reason. However, there are also many other reasons why you should establish business abroad, in this case outside United Arab Emirates. And this reason might be as simple as business expansion. You might want to sell your products in different markets, and for PR purposes, for marketing purposes, you will want to set up a company in the region where you're selling the goods. For example, if you want to sell to post-CIS countries, you might set up a company in Georgia because it's a post-Soviet country which is greatly developing, it has great infrastructure and tax incentives. And all the people speak Russian, the mentality is very similar to ex-CIS country citizens. So this is an example of a great alternative if you want to do business from UAE but sell to, for example, Russian clients. If you want to choose another region, for example, you want to enter European Union, then you might choose Cyprus or Malta because these are the two greatest low tax jurisdictions in the EU, and you can obviously use the benefits of the European directives, the European regulations, workforce, and plenty of other things that you will need to do business in UAE. And this is especially important for clients doing dropshipping businesses, online businesses, and all these businesses where you will require European paying agent or payment processing or banking in the EU, etc. And with the European company, it's much easier and much more respectable in terms of eyes of the clients to do business through a company in Europe rather than doing business, in this case, with a company from UAE. When you will want to expand to Asia, on the other hand, you might use such jurisdictions as Hong Kong or Singapore, as these two are the most commonly used in tax planning, and they both offer zero taxation on trading income, for example, that is performed internationally. In this video, we're obviously not going to cover all the jurisdictions that exist in terms of preferential tax rates. However, we'll cover the jurisdictions which, in our opinion, are the most important for UAE clients, because we also need to choose jurisdictions with good reputation. Somebody that has business in UAE and want to open a business outside will probably not go for the jurisdiction which has lower reputation. So we need to also have in mind the reputation of the jurisdiction and its onshore character and the facilities that it offers. So for example, we wouldn't go for offshore jurisdictions such as Panama, Belize, Seychelles, etc. We would go for more onshore jurisdictions such as Singapore, Hong Kong, Cyprus, Malta, Switzerland, etc. Let's start with the example of a client being a resident of UAE that wants to establish a business within the European Union. So two most commonly used jurisdictions are Cyprus and Malta. Cyprus, as you might know, has a standard CIT rate of 12.5%. However, for certain businesses, for example for businesses having income of intellectual property. Let's say an UAE resident, being a German citizen that lives here, open a company in Cyprus. This company in Cyprus is producing software, and then the Cyprus company is selling the software to third clients. So on this type of income, since it relates to intellectual property specifically, we get 80% exemption from corporate tax in Cyprus. So instead of 12.5%, the company will pay only 2.5% of corporate income tax on profits. So this is a first very good example of doing business through a European Union company while paying only 2.5% of tax. This relates not only to IT. If you have other income related to intellectual property, patents, know-how, maybe creating some designs for sunglasses that you want to sell, etc. This also applies. There is a very big list of the qualifying IP in Cyprus, so you can contact us for more information and we can check if your business can qualify as an intellectual property regime. And this regime for using the IP in Cyprus is called IP box, just FYI. So if you have the IP box implemented, you pay only 2.5% of tax in Cyprus. And there is no withholding tax on dividends in Cyprus, no withholding tax on royalties, and there are plenty other tax benefits. So as a UAE resident, you'll pay 2.5% rate in Cyprus, you'll pay 0 rate on dividends in Cyprus, and you'll pay 0 tax on dividends in UAE, as personal income tax does not exist here. Another EU jurisdiction that might worth be mentioning is Malta. So Malta, as some of you know, has a fixed rate of 35%. Now, this rate might sound very high, which obviously is. However, Malta has a tax refund system, and with the tax refund system, you can get the refund up to 30% of your tax payable. So for trading companies, for companies performing services, 30% exemption applies. So you get the rate of 35%, which is the basic rate, minus 30%. We have a rate of only 5% of corporate tax. So this is a good alternative for Cyprus, for example, where we have the standard corporate income tax rate of 12.5%. So if somebody cannot use the IP box in Cyprus, and when they want to provide consultancy services or professional services, or when they want to do trading in European Union, it might be a good idea to set up a company in Malta, because we will enjoy only 5% of corporate income tax. And same like in Cyprus, there is no withholding tax. So the UAE resident will do business with 0 tax on the personal level. Now let's discuss the second region, which is the Caucasus region and ex-CIS countries. One of the best jurisdictions, if not the best jurisdiction in this region, is Georgia. Many people do not know it, but Georgia is actually a tax haven. And we have a couple of other videos where we describe how you can achieve 0 tax in Georgia, whether on the personal level or on the corporate level. So let's go to the point. If a UAE resident wants to establish a company in Georgia, there are a couple of important tax regimes. One of them is called Virtual Zone Company. This is a regime designed for IT professionals and for programmers. So long story short, if you have a company in Georgia with the Virtual Zone certificate, you get total exemption from paying corporate tax. So 0 tax on the companies in Georgia providing programming and related IT services. The only thing you need to have in mind is that you must have adequate substance. So you must apply to the tax office for the relevant certificate, you must submit a business plan, you must have some employees, office, etc. But we can help you with that, we can advise you on what structure is the best to be chosen for this regime. Another interesting regime in Georgia is called international company, and in this case you can lower the tax to 5% when you have activities of maritime, shipping, logistics, or also IT, as in the case of the Virtual Zone Company. So it's another case where you can pay only 5% tax on the corporate level. Another interesting regime for trading companies specifically in Georgia is called Special Trading Company, and this is a regime designated for companies doing international trading. So majority of the trading, being at least 90%, must happen outside Georgia. For example, UAE resident opens a company in Georgia, the Georgian company buys from China and sells to Germany. This might be applicable, and with the STC regime you get total exemption from paying corporate tax. So again, zero tax on the corporate level in Georgia. And Georgia, according to a double tax treaty with UAE, doesn't withhold any withholding tax on dividend in Georgia, so the only tax that may be payable is in UAE. And as you guys know, UAE doesn't impose withholding tax on dividends or personal income tax on dividends. So you can have a structure with the Georgian company paying zero corporate tax and also paying zero tax on the personal level while living in UAE. It's also worth to mention that in Georgia, the moment of paying the corporation tax is the moment of distribution of a dividend. So even if you choose a standard LLC, which is taxed by 15%, or when you choose the international company, when you have the 5% rate, you will pay corporate tax only when you pay yourself a dividend, which is a great incentive. And as you might know from our other videos, Georgia is a trading hub in the Caucasus region, and it has DCFTA agreements and FTA agreements with China, Turkey, Ukraine, European Union, which makes it very easy to do international trading, attention, without import taxes. So it's also a good idea to replace UAE, in this case, with the Georgian company, if you want to trade with China or with Poland, with Germany, with other European countries, because, as I mentioned, there are no import taxes and a couple of benefits in regards to trading. Now let's go to Asia. So if any of UAE clients would like to set up a company for trading purposes and replace their UAE operation or expand to Asian markets, it might be very beneficial to open a company in Hong Kong. Why? Because it has a territorial system of taxation, and because the companies in Hong Kong do not pay any corporate income tax when the trading is done internationally. For example, a Hong Kong company buying goods from China, selling them to Europe, zero tax. And the same situation applies to Singapore, which is also a great jurisdiction, might have a slightly better reputation for some people, and these two jurisdictions have a great reputation in general, so it's a very good alternative to UAE. So Singapore, same like in Hong Kong, they do not tax any income that is generated abroad. And in this case, when we buy the goods from Gulf countries or Asian countries and sell them, let's say, to Europe, again, we do not pay any corporate tax. And these two countries, Hong Kong and Singapore, also do not withhold dividend tax to foreign residents. So as a UAE tax resident, you will also enjoy zero tax on dividend. So this is another example how to create a trading structure with zero tax on the corporate level and zero tax on the personal level. Let's say you have decided to set up a business outside UAE, for example in Hong Kong, in Georgia, in Cyprus, in Malta, in the other country. What is very crucial in this case is that you choose a country which has a double tax treaty with UAE, because first of all you will have a protection of not paying double tax, and second, based on the treaties, for example Georgia, UAE, you will be avoiding withholding tax in Georgia. So it's very important when you choose a jurisdiction for tax planning that it has a treaty, because it will protect you. We have been mentioning doing business through companies, but actually what might be very beneficial is doing business through limited partnerships or partnerships limited by shares. These are very interesting entities for tax purposes because usually they are tax transparent, and it's possible to do business internationally with a foreign partnership and actually paying zero tax when distributing the partnership profits. How this can be achieved? First of all, we must choose the partnership which is tax transparent for tax purposes. So let's say a limited partnership in Cyprus. There are two partners in the partnerships in these cases. Usually it's a general partner and a limited partner. And the general partner is entity or a person that is responsible for management, operations, decisions, same like a director in the company. And in this case, the general partner has to be located outside UAE, so we don't have the tax exposure. So let's say with the Cyprus limited partnership, we have the general partner based in Cyprus or in other country. This partnership provides international trading, it's selling goods, it has a bank account abroad, and it has the limited partner, which is an equivalent to a shareholder, like a passive income receiver, let's say, based in UAE. Why is it important that in UAE we do not have active business and we do not have the permanent establishment and we do not have decisions? Because we want to avoid tax exposure. As you know, UAE has recently introduced corporate tax, and this corporate tax can relate to individuals as well in certain cases. If an individual does a business either through individual establishment or through a partnership, he might be liable for 9% of corporate income tax. Now, how this can be avoided? So we need to make sure that the limited partner that is based in UAE is not involved in active business, it doesn't generate any activity within UAE, it does not create permanent establishment, it does not decide, and this partner should have only a passive / investor / shareholder like role. And in such case, all the income received by this partner from the partnership can be tax-free. And the short disclaimer here, this is not a tax advice, legal advice, business advice. This situation can happen, so you can't achieve zero tax rate by having a partnership abroad and receiving partnership income in UAE, but every case must be established individually. And we can provide you with the relevant rulings from the countries abroad and also from UAE that can analyze your situation, and then they can define whether you should pay tax or not. But in general, it is possible to achieve zero tax rate with partnerships if we don't have active involvement in UAE and if we have business located outside UAE. What we have mentioned, so doing business through another jurisdiction, paying zero taxes, and in general switching the tax liability to other jurisdiction is possible. However, you must make sure that a relevant substance abroad exists. This is because the Federal Tax Authority in UAE implemented corporate tax, they have implemented a bunch of international regulations related company residency, permanent establishment, and a couple of other things that might make you liable to pay tax in UAE even if you have your business abroad. So we need to make sure there is enough of substance available, we need to make sure that there are treaties in force, and let's look at the examples what is important in this case. So first of all, permanent establishment. You should have enough of infrastructure abroad so that the UAE FTA doesn't tell you you have a PE in UAE and you should pay taxes of your, let's say, Hong Kong business in UAE. So we should make sure that the directors are local, we should make sure there is relevant staff, office, and other factors that will state that the business is happening abroad and not in UAE. So the beneficial owner, which is based in UAE, should not be involved in the business. So we must make sure that the decisions are being made abroad and that the directors are located abroad, and also place of effective management is happening abroad. So please make sure when you have a company abroad that we have enough of substance so that the UAE tax office doesn't tell you you should actually pay tax here because we think that there is a tax residency of your company in UAE. So it's very important how you structure your business, and in most of the cases the beneficial owners should become passive and they should not be involved in the management of the company. So permanent establishment and the tax residency of the company are the most important factors that can give you a potential tax exposure in UAE when you do business abroad. So you need to make sure that the relevant substance is in place. And it might be also important to create substance for some other purposes. For example, you might be opening a bank account in Georgia. Georgian bank might ask you to provide documents that you have employees, you have a rented office, etc. You might be willing to get the virtual zone certificate in Georgia, for example. You need a business plan and you need infrastructure in Georgia. So disregarding the place of doing business, you should always make sure you have enough of substance, both to fulfill the requirements of the local governments and also to fulfill the requirements of not creating a PE or residency within UAE. In regards to the elements of the substance, there is no universal meaning. Every case is different and we must advise each client on the individual basis. So if you guys need advice on tax structuring, if you want us to analyze the treaties, if you want us to advise you which substance should be implemented so you're not exposed for taxation, feel free to reach out to us. We can offer you a private consultation. You can come to our office in Dubai, or we can have a Zoom call and we can help you to make sure you will not be exposed to tax. Our firm, IBCCS TAX, has offices in different parts of the world. So in addition to our office in Dubai, where we are now, in UAE, we also have an office in Cyprus, Limassol, Georgia, Tbilisi and Batumi, and in Estonia, Tallinn. So if you need any help in these jurisdictions, if you want to register a company or relocate to these places, or if you need assistance with registering a company in other places such as Hong Kong, Singapore, maybe US, please feel free to reach out to us, follow our social media and follow our YouTube channel, TaxTube. See you soon.